Yes, ma'am.
Is there no rent control in all of?
No, not that I know of. There's there's limitations on short-term rentals. The city has passed that, but you don't have to be in the city of Austin to do short-term rentals. We're looking at other areas, but as far as I know, there's no rent control. And that's what happens is that in San Francisco right now, it's about 20. Oh, welcome. Did you just come here from San Francisco?
Yeah, we just moved here about 6 months.
Congratulations. Did you buy a house with all that equity that you have?
We're looking to sell the duplex in Oakland and invest here.
So how much is a duplex in Oakland going for?
It's really crazy.
Come on, tell me.
So we bought a duplex for $350.
Uh-huh.
It's a 4,000 square foot lot. The mortgage
Three,
on that,
350 when?
2008.
2008 on a 4,000 square foot lot.
Mm-hmm. And we are renting out both units.
Okay. For how much? How much you?
Including tax, property taxes and insurance is $2,700 a month.
So the mortgage is $2,700 a month.
We are making $6,500 a month.
$6,500 a month for how big are these duplex units?
Small. So 1120.
1,120 square foot, and they're paying $3,200 a month for that side.
There's like bullet holes in the window. It's crazy.
Bullet holes in the window.
Yeah.
Bullet holes in the windows.
But it's insane in the Bay Area. The people, we call them snowflakes. They call for everything. There's ants. There's frogs. Clean up after yourself. Shut the screen. It's problems. So we're looking at investing here now.
Well, welcome. I'm here for you.
This is awesome.
Yeah.
But
Great.
we deal with rent control, so that's nice to hear that there's no rent control. We can only raise the rent. Sometimes they determine like 0.7% a year.
So it was $350 in 2008. What's it worth now?
We're hoping to sell it for around $950.
So $950. So it's a $600,000 gain that you have.
Yeah.
And you heard about we don't want to pay the government 15% plus depreciation recapture. So we're going to do a 1031 tax deferred exchange.
So then can you take a partial, so when you say once you touch the money, then you get taxed on it, can you take half and do something else with half of it? And then
Yeah, you just get taxed on that half.
the portion, okay.
Right.
Okay.
So if you want to take some of that.
Selling, paying off our house that we just bought, and then putting the rest in rental.
Well, yeah. I don't know if you'd want to really necessarily pay I would rather you say put more money into the property and have the positive cash flow pay your mortgage off. If you think about it. Because, see, your primary residence is really not an asset. When you think about it. It does go up in value, but it doesn't provide income. It doesn't provide depreciation. So, it's nice to have free and clear. I have a guy that's bought, the Nelsons bought, 6 properties from us this year? Just this year. Yeah, and they're selling their house in California. They bought in Saratoga for just 3 years ago for 1.1 or 1.2, and it's now worth 1.8. So and it's been a rental, but they lived there 2 out of the last 5 years, so they're going to get a tax-free. They're doing the same thing, and he lives in Twin Creeks. And he said, he asked me, Ken, should I buy a $500,000 house now in Twin Creeks? I said, I would much rather see you invest that money and rent, because the rent's a lot lower. It's less than $3,000, it's $2,500 a month, right? For a $500,000 house. Why don't you put that money in the bank or in more property that's producing income and depreciation, and use that money as opportunity money? Because when and if there will be, just as there is, a hiccup in the market, and especially in the high-tech market, what's going to happen? What's the first homes that are going to be the ones that people are giving away? 400, 500, 600. We even saw it with one of our clients that was working for Dell. He was working for Dell, and they said, 2 weeks notice, we're shutting that division down, and he lives in Avery Ranch. I'm like, wow, he's out of there. So those are the first ones. That's opportunity money for him. So I would say it really is, use this as opportunity money for you, and invest wisely, and not invest in something that would be the first to drop. So luxury market is one of the first to drop, and the condo market is the first to drop. Those are your canaries in the coal mine. So when we start seeing prices of condos dropping, or the luxury market's already the buyer's market right now, and it has been, but people are still buying those luxury homes. So yeah, well, welcome. I'd love to talk to you about that, and we're going to talk about where to throw the dart. That's the important thing, and what kind of properties would be ideal. So which ones are expected to go up? So